you can see how over kind of the next 20 years, the nickel and cobalt landscape could change substantially by material just from Indonesia alone. Really appreciate the invitation. My name's Harry Fisher, as Amy said. I'm from Benchmark Mineral Intelligence. Today I'll talk to you about cobalt. Please, as we've got a few people in the room, please just ask questions as we go along or at the end. So as you can see from my presentation, it's kind of a fairly traditional market presentation, kind of what's happening going forward, what's the balance looking like, what's changed, what's interesting. Just quickly an introduction to Benchmark, if you're not familiar. We're a price reporting agency and analysis consulting firm specialized in the lithium-ion battery sector. So everything lithium-ion batteries, electric vehicles, energy transition, that's our coverage. So just going from top to bottom, we started off in price assessments, and that's grown substantially in the last kind of 6 or 7 years. You can see the large number of prices that we cover now at the top there, and that's growing all the time. And we're looking at adding anode and cathode assessments and potentially even kind of recycling and black mass indicators going forwards. They're kind of a mixture of weekly and monthly assessments. In the middle, we've got our kind of traditional analysis forecasting subscription service. Again, a lot of coverage of the battery metals and supporting sectors. We've also got a consultancy division in there, which is where I come from. So we do individual client bespoke work, again, within this space, but a bit more strategic, helping companies with the kind of the fine details. We've a quickly growing ESG team as well. And actually the Cobalt report's being released in the next week or so. So that's going to be our first look at a full deep dive of the cobalt sector from an ESG standpoint, and as you know, that's critically important for all of these sectors, but for not least cobalt. And then of course we've got our kind of regular news analysis and events business where we arrange events all over the world, and the Benchmark Week is coming up next month in LA, and that's our kind of flagship week of events every November. So the title is set for surplus or destined for deficit. So I'll talk you through kind of what's happening in the outlook and where we're seeing the market going forwards. And that has changed quite substantially even in the last 3 to 6 months. So just start off with a quick snapshot of where the market's at now. Look at the rising importance of Indonesia, and if you were at the nickel presentation earlier on, I'll touch on a lot of those topics as well, and then kind of summarizing what's changed, the balance and the chemistry mix as well. So this shows prices and how they've progressed for cobalt sulfate through this year, and you can see it's moved quite substantially. It's dropped by kind of more than 50% from the peak in February, March. And a lot of that is due to COVID-19 lockdowns in China that persisted for 2 or 3 months in Shanghai. And of course, they continue to have COVID restrictions that are impacting the economy. So that was part of it. And specifically for cobalt, the LCO market struggled quite substantially. Those are typically used in portable electronics, mobile phones, those kind of applications. And after kind of a boom during COVID, we saw quite a sharp slowdown in that sector. And given the importance of that for cobalt, that did impact consumption, particularly in China. So you can see how much prices fell. They peaked at about $40 per pound, which was the highest level they've been in several years. And in Europe, for cobalt metal, they dropped to kind of the mid-20s. In China, they dropped even lower, probably close to 20, if not below 20. But you can see they have bumped a bit on average in September, and we do expect them to stabilize and probably start to pick up a little bit because that they have fallen such a long way. Fundamentals still remain very robust. Demand's improving. Obviously, we continue to see record EV sales in China. So I think things are on the up, but at the same time, there's a huge amount of supply announcements coming onto the market, both now and over kind of the next 5 to 10 years, which I'll touch on soon. And then that, of course, impacts the market balance. So a big focus of the presentation I'll do today is on Indonesia, and we heard in the nickel discussion earlier on kind of how important Indonesia will be for nickel, and that's much the same for cobalt. The development of the HPAL capacity in Indonesia from nickel laterites is typically a kind of a 10-to-1, 8-to-1 nickel cobalt ratio. So that's all coming out of the same capacity. So we're kind of talking all about the same thing, but the amount of capacity build out in Indonesia going forward is going to be huge. And even in the last 12, 18 months, that's changed substantially. So on the left, you can see the number of cobalt producing projects we've tracked. The start of 2021, start of 2022, and the latest forecast we've done Q3 this year. So in the space of 18 months, the number of projects that we're tracking has increased by 4 times. And that's just in 18 months. And we're almost seeing every other week a new announcement from a major player, typically Chinese funded, into Indonesia. On the right, you can see the total potential, again, across those 3 timeframes. So in 2030, at the start of 2021, we saw total potential, so that's all projects, all development stages, of about 40,000 tons of cobalt. Fast forward to the start of this year, that was about 60,000. Now it's 70,000 plus. So again, in the space of 18 months, we've got an additional 34,000 tons of cobalt in 2030 total potential. So that's in a market that's kind of 150, 160,000 tons at the moment. Obviously, it's growing very quickly, but that's a significant share of the market that could potentially come from Indonesia. But it is worth flagging that a lot of these projects are at the very early stages. In 2020, we didn't have any cobalt production from HPALs in Indonesia. We've now got 2 operating, 1 more to come this year, and another one to come next year, and then beyond that too. But you can see the proportion of projects that, using our ranking system, that kind of sit in that highly probable, and of course they're likely to come shorter term and are more likely, versus the probable and possible projects that make up more than half of the pipeline, that still need a lot of development, a lot of funding, and are probably 5 to 10 years away still. So I guess it's worth flagging that, and that's the way that we put together our supply forecast. So again, I've got those kind of 2 timeframes, early 2021 and now. The total potential, you can see, has increased by kind of 30,000 tons in 2030. But when we kind of weight that by those project status, that obviously drops down quite a lot, and that's our base case long-term forecast. That 34,000 tons has dropped to 25,000 tons. Still a big number, but it's worth kind of bearing in mind that, of course, all of those projects aren't necessarily going to come on. And on the right-hand side, I've kind of flagged some of the potential risks that we've got to these projects being developed. HPALs in the past have had a bad reputation. That's quickly changing due to the success of these Chinese investments in Indonesia and how they've managed to ramp them up on time, mostly on budget, and some of them even ahead of schedule. I think the major concern is from an ESG standpoint in Indonesia, and this is what I think needs to kind of be carefully considered by the market as a whole, is how the emissions of Indonesian production, that's primarily still coal-based, although they are looking at switching to renewables. You've got dry stacking of tailings, which has its issues as well. So that there's a multitude of ESG reasons that may kind of lead into my final point on OEM acceptance, is how will the Western OEMs accept this material? Yes, there's a huge amount of potential nickel and cobalt coming out of Indonesia, but if it's poor from an ESG standpoint versus material from Australia, from Canada, from other parts of the world, will that be accepted? It's almost certainly going to be accepted by the Chinese investors and the Chinese market. But if you look at it from a total market perspective, are all those tons equal? Yeah, it's primarily HPAL capacity. Yeah.
Sorry, is the cobalt sulfate coming out of Indonesia the same as the cobalt that comes out of the DRC?
So it's
market-wise,
it's generally an intermediate product that comes out of Indonesia. So it's MHP, mixed hydroxide precipitate, and then that's being processed, and most of that is in China. We're kind of looking at 70% of cobalt refinings in China still. That will change, of course, as the markets in Europe and North America develop. But at the moment, we've got around that proportion coming out from China. So that's where the sulfate's coming from. So this slide I've talked about Indonesia, but I think the APAC region as a whole, you can see for both cobalt and nickel how important Indonesia is, particularly for nickel, major nickel producer. The DRC makes up a big proportion of that rest of the world chunk for cobalt. But you can see how over kind of the next 20 years, the nickel and cobalt landscape could change substantially by material just from Indonesia alone. So what has this meant for our market balance? As I said, we have seen quite a significant shift recently. And as you can imagine, all of those new tons that have been announced does make quite a big difference. So this is a comparison of our market forecast from Q1 this year and Q3 the latest. So we're talking about a period of 6 months. That swing is quite substantial. And I'm not highlighting it because we got it wrong. I'm highlighting it because it's changed a lot. But why is that? You can see that earlier this year we were forecasting a fairly balanced market. So this is in proportion of the market terms, just to make it easy to compare. The market was expected to be relatively balanced over the short term, and that was going to support prices at the kind of the high 30s, 40s that they were at the start of this year. And then shift into a small deficit for the kind of the medium to longer term. Now we're expecting a fairly significant surplus over the short to medium term, and that deficit longer term still emerges. But we're looking at quite a different environment for prices potentially over the next 5 to 10 years, as things stand. But what caused that? And supply, as I've said, has obviously played a part in the changing of our forecast. And just this is a little bit complicated to unwind, so forgive me. On the left, we've got our market balance in early this year. So we had a 8,000 ton deficit in 2026. Versus on the far right, we've now got a 19.3 thousand ton surplus. The Indonesian supply you can see there makes up a fairly significant chunk of the total supply additions that we've added in. But that drop in demand, and because it's a supply demand deficit, it's kind of backwards. But if you see that 24,000 tons of cobalt as a drop in demand in our forecast, that's been the big swing. But why is that? Well, what's changed so substantially for demand in the last 6 months alone? Well, this really tells a story. So again, I've got the same timeframes as I've been talking about: start of 2021, start of 2022, and now. On the left, we've got LFP primarily and a small amount of LMFP, increasing in share. So in 2026, our share of the market is now 20% higher for LFP than it was at the start of 2021, and that's impacted a few different chemistries. But the main loser has been NCM. Dropping to only half the market in 2026, whereas it was 2/3 at the start of 2021. But what's caused that? Well, we hear a lot of noise about LFP and how it's increasing in China and maybe not increasing so much in the rest of the world, but that is starting to change. So the LFP share alone has risen 8% year on year this year in our forecast. And now we're expecting LFP and a small amount of LMFP to kind of maintain a 35 to 40% share of the market in this decade. So on the demand side, we've started to see increasing commitments from the OEMs to use LFP in their standard range models: Tesla, Ford, VW, Stellantis. Not in all of their vehicles, but particularly the standard range and mass market models. And on the supply side, it's traditionally been a cathode chemistry that's only been produced in China, but the intellectual property restrictions are easing, and that will mean that there's increasing supply of the cathode chemistry in Europe and in the US to suit those markets. And that's really only happened in the last year or so. So that's why that LFP share has swung so substantially. And it was a technology that had basically been written off 2 years ago. The shares are very low. NCM was rising. The energy density just wasn't there for LFP. But there's been other cell and pack improvements that have meant that the pack level energy density has improved quite a lot. On the right, there's some more of the kind of the much smaller share but emerging chemistries, and we are more conservative on these because they do take a long time to develop. But it's just worth flagging, and the potential impacts for cobalt in particular. LMNO is a good example. It's been developed since the early 2000s, and it's still not really there in any great share of the market. So it does take a long time to develop these chemistries and for them to be accepted by the OEMs. So yeah, that kind of plays into our conservative outlook for some of the more emerging chemistries. So just to wrap up on the demand side, that share of LFP has increased from about a quarter of the market in 2021 through to what we expect pushing 40% of the market in the next 5 years. And most of that is LFP. Some of that is LMFP, but yeah, it's primarily an LFP story. And that, of course, without cobalt in that chemistry, does have a negative impact on cobalt demand. And just going back a little bit, on the left-hand side, that's that 24,000 ton adjustment in medium-term demand is primarily from a greater share of LFP. So yeah, so it's a number of things. It's the OEMs deciding that they're ready to use LFP en masse in standard range vehicles, and it's the supply side. There's going to be more LFP being made outside of China, and that instantly makes it more accessible to the market. But there's also been cell to pack improvements, BYD's blade technology that's enabled the energy density of LFP to improve, not at the chemistry level really, but it's more when it goes into cells and packs. You get improved energy density, and therefore it's more cost competitive than it was a few years ago. So just to wrap up, I've kind of summarized how our market view has changed quite a lot. I'm sure there's a few more swings to come, but you can see how quickly it can change, and how some big announcements on the supply side and some big demand shifts can make a difference. I think it is still worth highlighting that the outlook for cobalt is still very strong. Yes, we may be forecasting a small surplus going forwards, but demand growth is still very good, and it will continue to be dragged along by the huge amounts of electric vehicle and lithium-ion battery growth. I think demand will always be a concern for cobalt. It's constantly being critiqued for its position in the energy transition and whether it's sustainable, but the demand growth speaks for itself. And I think there still remains a very positive outlook for cobalt as a whole. Thank you very much.
Harry, just in one of the earlier charts where you were showing demand and supply between now and 2030 and the sort of switch from deficits to potential surpluses. And then in 2030, it kind of switches the other way. So what drives that? So
I think the general view, and I think basically whatever EV penetration forecast you look at, obviously we've seen a lot of growth in the last few years. And we really saw kind of the big shift in EV sales kind of 2020, 2021. But the numbers are still relatively small. We're only forecasting about 10 million sales this year. If you fast forward to 2025, 2030, that's when it really starts to pick up. And it's that point at which EVs reach parity with combustion engines where people start making the economic choice. I think I'm sure a lot of us would probably like to buy an EV, but it's access to them and the fact that they're still very expensive for most models. So demand will really start to accelerate in kind of the late 2020s period. And that's why on that chart you see that swing back into a deficit from 2030, because demand continues to grow very quickly and the growth rate increases. But also, of course, there's that kind of 10-year period where we kind of got quite good visibility on projects, and then it starts to tail off. Beyond 2030, we'll start to see more secondary material. So that will start to play a part. And now our numbers include the work we're doing on recycling, and how the volumes we're seeing for secondary material, which will be relatively substantial for cobalt and nickel. I touched on yesterday how lithium, it's a bit more unknown. But that early 2030 period when we start to see the first wave of EVs being recycled, that's when we'll start to see more secondary material hitting the market. So that will help, but those numbers include that. So there's still a long-term deficit for sure.
Two questions. With the reliance on DRC for cobalt at the moment, will there be a stage reached with this Indonesian material coming out that people will prefer the Indonesian absolutely to the DRC? Or is it more likely to go just to China and what part?
Possibly, and the DRC will lose share over time. They're still 75% of the market, and there's a reason for that. It's because they've just got massive reserves. The reserves in Indonesia are substantial, and they will start to eat share away from the DRC on kind of a total market basis. But volume-wise, they still won't come anywhere close. There's that.
Yeah, and just a second question. Is the LME cobalt price a good indicator of the market?
No. It's kind of a market of last resort, really. The benchmark is the fast market's metal price. So that's traditionally been the kind of the benchmark for the market. I suspect that will change at some point in future because it was always traditionally a metal market for industrial applications. Obviously that shifted. And last year was the first year that the EVs became the biggest end use sector for cobalt. And obviously going forwards, the share will just increase. So does it make sense to have a market related to a cobalt metal price? Some metal does go into EVs by dissolution, but the majority is sulfate. Does it make sense going forward to have the market pegged to a chemical price that is ultimately being used in batteries rather than a metal price, which is a more traditional application? Excellent. Well, thank you very much.